All right, let's dive straight into this Ethereum chart on the weekly time frame. The current price of Ethereum, as shown here, is $3,402.24. This is a critical point because it sits just above a key support zone and is moving toward a significant resistance level. First, notice how the price respects these diagonal trend lines. This symmetrical channel clearly indicates the market structure. The price has consistently bounced between these lines, showing strong reactions to both support and resistance. And right now, at $3,402.24, the price is positioned in the middle of this setup, heading toward the next resistance zone. Now focus on this rebound here. The bounce occurred right at the intersection of the 0.382 Fibonacci retracement level and a historical horizontal support level around $3,000. This confluence zone often acts as a magnet for price, creating high-probability trading setups. With the current price just above $3,400, we're seeing momentum building toward the next key level. Looking closer at the recent price movement, you'll notice the price is pushing toward the 0.618 Fibonacci extension at $4,167. This breakout will be critical to confirm bullish momentum. However, we're still trading below that level, so traders should watch closely for signs of rejection or continuation. All right, let's dive into this weekly chart of TONUSDT. The current price, as we can see here, is $5.5821, showing a 3.77% increase for the week. Now let's break this chart down step by step. The first thing we notice is the descending channel marked by these two blue trend lines. TON has been trading within this downward channel for several weeks now, showing clear lower highs and lower lows, indicating a bearish trend. However, this purple zone around the $5 level is acting as a key support region. Now, this purple zone is critical. It represents a strong historical support area where the price has bounced multiple times before. TON dipped into this zone recently, but as we can see, buyers stepped in aggressively, pushing the price back above $5.50. This could indicate a potential reversal or at least a temporary relief rally. Looking at the recent price action, the price is now testing this descending trendline resistance. A breakout above this level would be the first sign of a trend reversal. If the price can close above the $5.80 to $6 range, it could target the next key resistance level at $6.87, as marked here. On the flip side, if TON fails to break above this trend line and loses the $5 support, the next potential target could be down to the $2.93 zone, which aligns with the longer-term support levels and the lower boundary of this descending channel. Now let's look at the bigger picture. TON had a massive rally earlier this year, hitting highs above $8. Since then, it's been in a corrective phase, respecting this descending channel. However, the consolidation near the $5 zone suggests that the selling momentum might be weakening and a breakout could be on the horizon. For bullish traders, the key level to watch remains $6. A sustained move above this level could signal a breakout and a possible retest of the $8.11 highs. For bearish traders, if the price breaks below $5, the next logical step would be to target lower Fibonacci retracement levels or the key horizontal support at $2.93. In summary, TON is currently at a decision point. Will it break above this descending channel resistance and reclaim higher levels? Or will the bears take control and push the price below $5? As always, patience and risk management are key.